is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials up 119. NASDAQ is down 17. S&Ps are off 2.5. Gold contract down $9.40, trading at $13.16 an ounce. Silver down 14 cents, $16.39 an ounce. Copper down 3 pennies at $3.10 a pound. Light sweet crude up 25 cents. $61.21 a barrel. Notes and bonds are flat. You get the 10-year note, 120.17. 30-year bond, 144.28. King dollar. King dollar's up 448 ticks, 89.675. King dollar has caught a bid. It's going to go after that higher swing point. Euro is at 123.05 to 1 U.S. dollar. The yen is at 106.24 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Well, what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We go over and we take a look at the SPY. What you're going to see with the SPY is this. Right now, you've done 50 million shares. That's light volume in the SPY. You know, yesterday we did 105 million. Bottom line, at 50 million, you're only going to do about 80 million, I suspect. And we're coming into a top of the gap. The top of the gap is 274.24. We've hit 274.43 thus far. If we bring this in a little bit closer, intraday, what you're going to see out here is that you had the drop down at 10 of 2, had some juice behind it. That being said, you know, we'll see if it can get back over to the number to keep your eye on coming into this close here is 275.17. You know, the longer that we stay underneath that, the more probability is that you're going to go after the lows versus the highs. NDX 100, 3 Qs. What do we have with the NDX? NDX 100 right now, trading sideways. You're down 19 cents. You're at 171.51. And bottom line, that is still in the higher range where we broke out of. The composite, different. The composite, when you take a look at the whole NASDAQ, that which is the composite is snaking its way back inside the lower range. We closed inside the lower range last night. We're down another 16.5 points. The lower range is 75.05. So the NASDAQ composite is making its way inside of that. Now, that being said, what we had yesterday is that we had light volume on that composite. It looks like we're going to have a lot heavier volume out here today. Right now, we're 1.475 billion. We go to the small caps. We look at the small caps. What you have with the small caps, we're down $1. You get 10 million shares traded, and that's some decent volume on the way down. So the small caps, they're running after the 155.88 mark. That was the high of the last swing high, which is on February 27th. Gold. Let's go take a look at that gold market. So now we're coming into a Friday. We have been challenging the lows once again. We take a look at this. You can see what we've done here. Now, you're coming into the swing point, and you're coming in with lighter volume, but this is always dangerous on a Friday. So we're coming into the swing from last week. The low of that swing is 13.20. We did 345,000 contracts. Thus far, we've done 233. So you can see we're coming into it with light volume. That being said, guess what? We're coming into a Friday. So that's game. And then we also have the low that was established out here on March 1st is also game. We go to the GDX. Let's go take a look at some of the actual equities inside the metals market. GDX is not looking that bad. That being said, you're pulling back with dramatically lighter volume. 17 million versus 32 versus 59. So inside the equities, meaning the metal equities, you don't have the selling. Notes and bonds. Let's go over to that note and bond market and take a look at it. First, we'll go take a look at the 10-year note. 10-year note out here trading 120.16. We have done 1.2 million contracts. Yesterday, we had some juice. We did 1.6. Yeah, this is pretty good. Okay, so this is still building cause to go after the swing high of March 1st, which is 120.23. That's on the 10. We take a look at the 30. 30-year right now, also trading flat. We're at 144.28. We've done 244,000 contracts. Now this got over the highs of yesterday. It did have lighter volume, but now we're getting away from those highs, which is pretty cool. So this 30, wants to make its way up to 146.21. That's a decent number, man. That is absolutely a decent number. King Dollar. What do we have with King Dollar? Let's go take a look at it, because King Dollar is running the deal here inside the metals market. King Dollar out here, we've done 22,000 contracts. You do have some volume behind the move. It looks like good old King Dollar is going to go after. Well, your first swing is 89,930, but you can really make the case here that this wants to go after the swing from March 1st. The reason I'm saying that is that King Dollar did have a sign of strength last week when we went from 89 to 89,800. That was on the 6th. This is another, basically indication that you are going to go after that swing point. The real kicker is going to be, does it make it or break it as it's going after that swing? Let's go take a look at some of the higher volume stocks out here. You have Advanced Micro is up 10 cents. Micron is down 92. We have Microsoft up 20. Let's see, where is Monsanto. Monsanto's getting croaked out here. So Monsanto is down $4.50. This went intraday. What this is all about, folks, is that the bottom line, the Federal Trade Commission bottom line is more than likely not going to let Bayer buy Monsanto. What's happening there ASAP too is that this is actually hitting Aetna, because CVS wants to take over Aetna. So it seems that the Trade Commission bottom line is not going to be letting a lot of mergers go through. That's what the market is saying right now. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. We have the Dow Industrials right now up 109. NASDAQ is down 18. S&Ps are down 4. We're coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 100. You get the NASDAQ down 21. S&Ps are off about 5.5%. Percentage moves out here. Kind of what we get. You have the Dow down 0.3%, the NASDAQ down 0.3, and the S&Ps down 0.1. We go take a look at the XLF inside the financials out here. XLF out here today. Yesterday you come down. You had the expansion of volume. We did 57 million shares after hitting highs at 51. You get a contraction of volume out here today. We are down only 2 cents, and you get 33 million shares traded. The XLE, we go take a look at the energy markets out here. Energy markets right now, that is down 47 cents, 67.07. This baby's going to go going after that swing low, that February 9th swing low, $64.45. We go take a look at Exxon. Exxon yesterday, bottom line broke its lower range out here. Right now, you're up 67 cents. We take this, put this on a weekly, and what you're going to see on the weekly is that Exxon's in trouble. Bottom line, this Exxon looks to me like you got $66 on the agenda. So we'll see just how the rest of this shakes out. When we take a look at the let's go inside the actual physical oil market. Oil out here, crude out here today is up 0.4% or 23 cents. Yeah, you get a sideways move. The intriguing thing about oil is that there's no doubt that this is at a high price compared to the equities, the large integrated oil companies. They came off the high, and they've come off that high with some good juice, by the way. Let's go take a look at the king dog out here, Amazon. So Amazon right now trading down $8, really still at highs though, $15.82. Now let's go to Walmart because this is going to get really intriguing. So Walmart today is down 50 cents. Now it doesn't look like a big deal, but let me tell you, you get an expansion of volume. You get 13 million shares, and what's happening with Walmart out here, this went down intraday, and what you're going to see, it went down fast from, that was at 1 o'clock, from a price point of 88.53 down to 85.90. And what this is all about, so check this out. This is going to be wild watching how this thing shakes out. So in a race to catch Amazon, and online retailing. Walmart, what this is about is that Walmart has a whistleblower, an executive, that he claims that, here, let me read it through for you. In a race to catch Amazon on online retailing, Walmart issued misleading e-commerce results and fired an executive who complained the company was breaking the law, according to a whistleblower lawsuit. The former director of business development at Walmart claims he was terminated under false pretenses after repeatedly raising concerns about the company's overly aggressive push to show a mediatric growth rate in e-commerce business by any means possible, even illegitimate ones. Under CEO Doug McMillon, Walmart has invested billions to catch up with Amazon. The whistleblower claims Walmart mislabeled products so that some third-party vendors received lower commissions, failed to process customer returns, and allowed offensive items onto the site. He was dismissed January of 2017, just one day after the retail industry publication singled him out as one of the sector's rising stars. He is claiming it's in retaliation for warning senior executives about the misdeeds. Walmart. So check this out. This is what's really wild about Walmart. If you remember, we'll bring this back now. So what had happened when Walmart went topside, folks, in November, that was what it's all about. The numbers were pretty impressive. You know, we'll find out how it's going to shake out, but these numbers are impressive. Walmart gapped from $89, opened up the next day at $95, went to $99. And then continued all the way up into the price point of $102. Now, that being said, well, guess what? The next time they come out with numbers, which is on the February 16th, Walmart was at $104. Bang! It drops down. It's at $91 2 days later. Why? Because those numbers didn't come out. So it's going to be intriguing here is that what that executive's claiming is that in here, those numbers were fake. Bottom line, they come out the next time. Now Walmart is below that whole level. And inside that allegation, if you saw what's inside that allegation, and this is where retailers, you see this happen a lot over the course of years. What happens is that when you are basically cooking books, one quick way retailers do it is that they don't, basically, what he was claiming in there is that they stall the returns. In Walmart's case, you can imagine if you stall returns, whether it's even for 2 or 3 days, bottom line, most times that's enough cash flow per day to juice some numbers up, you know. And you have to do it at some point. That's the bottom line. You got to bring those returns back at some point, which does hit your sales figures. But we'll see where the whole thing shakes out. I'm sure that Amazon right now, well, I don't think there's much that really bothers Amazon, actually. So let's go over and take a look at Apple. Apple right now, that is trading sideways, 179. That's not saying too much. Facebook, same setup, trading sideways. NVDA, so the chips. Oh, excuse me, folks. So chips right now, NVIDIA is at 249.60. Let's put this on a weekly. So the number on the weekly to close is 251. It's going to be interesting. We've been up here for 6 weeks now. Lam Research, LRCX. This is when this broke topside. This broke topside in a big way. So Lam right now is trading 223. That'd have to close under 219 by tomorrow in order to basically have a failure. You know, Lam is actually pushing into its swing, and it has volume as it's pushed into that swing. Take a look at the XAU, the HUI. XAU out here, this is trading down 88 cents. You know, this is still strong. Still in the higher range, which is, you know, that's really positive in correlation to the Gold Bugs Index. The Gold Bugs Index is having, is under its larger trading range, and it's having a hard time holding price. This is trading 170, 196 right now. It's down $2.23 today. Your higher range is 174.29. Not the end of the world, but bottom line is that what's intriguing is that this has had it's been down a few times down at these levels. It's going to need a lot more volume to break the last low. The last low is 168. You had 29 million shares. That was going to 34 million, and it's the breakout area that we're dealing with, which is 28 million. Bottom line, we'll see coming into a Friday. Are those babies going to be able to hold price? That's going to be the kicker. Holding price or not holding price. We go take a look at the Dow Industrials. Strength versus the weakness inside the Dow out here. Point-wise, United Health. United Health's putting 32 positive points. McDonald's putting 25. Goldman's putting 17. Taken away from it, you get Dow, DuPont, 6 negative. Intel, 5 negative. Boeing, 4 negative. No big deal there. Stay right there, folks. We're coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 143. You get the NASDAQ down 13. S&Ps out here are flat. And we go over and we take a look at the... I want to stay inside those SMHs. Let's go take a look at the chips in general. So the chips in general, folks, you know, bottom line, had a huge deal bringing up the NASDAQ composite. You know, even after we went down on the 9th of February. So picture the chips had gone, the SMHs had gone from $108. That was the highs out there in January. We start going down. We went down to 193. You know, so that was quite a hit. There's no doubt about that. You're talking about 20 points down. 18%. And then guess what? It fired back. Not only fired back, but it took out these highs with a vengeance. That's on the, well, it's on, wouldn't matter, daily, weekly, monthly. When we take a look at how this is set up, the 108.56 is the number to keep your eye on. So we'll see whether it's going to get back inside that area. Right now, you're away from that area, and you're away from that area pretty good. And most times, when you get away from an area, it takes quite a bit to get back inside that area. If you do, guess what? You get a monster failure out here. If we go back to Monsanto for a second, so this is what you have. The intraday, when we take a look at this, you look at this on a 6-month chart, man, it's nasty. This thing happened intraday. Now here, let me pull this back first, because when you take this and we put this on a couple-year chart, it's been up at these levels for quite some time. And it looks like, yes, it's going to go after like 114. You're at 117. Now, intraday, it's a mess. This thing went down fast and furious. And so what this is, what I expect you're going to see out here, let me explain what it is first. Bayer is said to face U.S. antitrust hurdles over Monsanto. Bayer's plan to win antitrust approval for a takeover of Monsanto hasn't satisfied U.S. officials, who are worried the merger could hurt competition, according to 2 people. The Justice Department's antitrust division doesn't think Bayer's proposal to sell businesses goes far enough, said the people. So simultaneously, when this happened, what you had, if we go over to Aetna, watch this one. This is pretty cool. So you go over to Aetna, and I put this up intraday, and you're going to see Aetna also takes a hit. Now, it's intriguing about the Aetna deal, right, is that this is not a foreign power taking over basically an American company. And that's what, of course, that's what the Monsanto deal is. Monsanto's headquartered out of St. Louis, has 20,000 employees. Bayer is a monster chemical company based out of Germany. So we go back to Aetna for a second, and what you're going to see, Aetna is based out of Hartford, Connecticut, 47,000 employees. CVS, I think, I remember them starting in Rhode Island, I think. Because, yeah, they're in Woonsocket, Rhode Island. They got 160,000 employees. What you're going to see is that simultaneously, both Aetna and CVS went down, because it looks like the way that the antitrust division, it doesn't look like any kind of deals are going to get done, period. That's how this is kind of shaken out. And the Aetna-CVS deal was a different deal, but they're both very large players inside their fields. I'm not quite sure how, we'll see how that one shakes out, because I don't know how they can get them on antitrust when they're both basically in different businesses. But you can see the gist of it. There's been a lot of deals that have been stopped. The ones that got publicized more so have been foreign governments taking over, not governments, foreign companies taking over U.S. companies. But it looks like just companies, large companies taking over companies in certain sectors, more than likely you're going to basically get slowed down, get stopped, all of the above. Let's go take a look at the small caps out here, the IWM. IWM right now trading down $1. You're at 10 million shares. It looks to me like as we come into this close, you're going to get light volume, but yet the price is not holding here. So coming into a Friday, and we do have triple witching, and triple witching is always going to be volatile, and we're in a volatile market now, by the way. That just brings the volatility much higher. Right now, the VIX is trading 16.80, and it's down 8.3, but what you're going to see is that we haven't had much movement out here this week, but yet the VIX will not back off. It almost, the way this thing is really set up, it looks like it could be up to 26 at any moment. I mean, the spike we had on the 9th, on the 6th rather, the 6th of February went up to 50. The 9th you went up to 36. The 10th you went up to, no, the 9th. I see, yeah, the 8th, 36, and then the 9th went up to 41. Then the baby crashed right back down into the $15 area. Right now you're at the 16.81. And you know, the volatility, I suspect, is going to stay out here pretty good. Let's go over and take a look at the yen. So for everyone that's in the metals market, the challenge right now, no doubt, is we keep testing these lows in the metals market. They've been holding. Bottom line, you know, how much longer are they going to hold? Well, if we take a look at this yen, the yen right now is at 106.22. The yen continues to look like it wants to get down into the lowest swing point, which is 99. We get that, you're going to get big action inside of the metals market topside. Now, that's the positive. Now I'll show you the negative. The negative right here is the euro as well as the dollar index. And the dollar index is 60% of it is the euro. So if we go over to the euro right now and we take a look at it, what you're going to see is that it's been in this consolidation. You know, longer term, this thing looks like it wants to go to 139. Shorter term, it's like, yeah, man, you're going to go test the bottom of this range once again. The bottom of the range is approximately 122. We're at 123. That's the shorter term. Longer term, this thing is just building costs to get up to that 139, going back to May of 2014. And of course, coming into the Friday, as we said, you got to hold on because there's going to be volatility out here. The real question is going to be, you know, what else comes out after the close out here? Because what we had intraday out here is that the New York Times come out with an article that the FBI subpoenaed the Trump Organization over documents, so the business part of it, related to Russia. That took the S&P down about 6 or 7 points. What I do expect we're going to see out here after the close, there's going to be more news. You know, the news is going to be everywhere. There's no two ways about that. But the way that this market is just setting up right now, it's almost the aspect that when this market closes, don't be surprised if there's not more news coming at us. We go take a look at the inside the, we got Walmart, we got Amazon, you get Nike. So what's pretty wild is that Nike, folks, has made it all the way back up to its high. So Nike's trading 66.48. And whatever kind of silver lining that they have, you know, you really want to kind of understand it if you're in the retail business. Because Nike has been able to do what Under Armour hasn't been able to do, what Dick's hasn't been able to do, what many of these other people that seem that they're in the athletic field have not been able to do. You stay right there, folks. We'll be coming right back. We have the Dow Industrials up 137, NASDAQ down 11, S&P's flat. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down. Dow is up 135. Nasdaq's down 13. S&Ps are down 1. Let's go take a look. I want to take a look at these Williams. Okay, so these pipelines, right? So Williams Company, energy infrastructure focused on connecting North America's hydrocarbon resources. This is at a low right now, so it's trading down 178, $26.35. And if we take a look at this move. Whoa, baby. Okay, so you get a monster ABC down. Your A point is 30, 26, $4. That gets you to 24. That's on the daily. We take a look at this on the weekly. Oh, this is going to be dangerous. Okay, this is a dangerous little deal here. So we're at 26. Looks like 20's game. We put this back, and this is going to be like just a disaster because you take a look at it in a monthly, you're at $61. These crashed to $10 in 2016. Did a counter trend bounce, and now bottom line is that it looks like $20 is game again. So what you have here, now this was another one. This is intraday. There's a lot of action out here. This is another one. This went lower intraday. It went from $28 to $24.76 intraday. And what this was another ruling. Now what this ruling is, this is really intriguing actually. So I didn't realize that they could do this, but so pipeline stocks sink as the federal regulators ruled that master limited partnerships can no longer receive a credit for income taxes that they don't pay. Williams Company was the largest decliner inside the S&P. The Federal Energy Regulatory Commission's decision this afternoon came in response to a earlier court ruling that found that the agency's long-standing tax policy could result in double recovery of costs for master limited partnerships. Because the master limited partnerships are pass-through entities that pay no federal taxes, investing in them can get a better after-tax return than by investing in traditional, conventional corporations. The court did not mince words. Granting an income tax allowance to a master limited partnership results in inequitable returns. This is very clear language, amounts to a very clear marching orders for us. So the bottom line is that what you had intraday out there, it seems like in the past, evidently it could basically, that the partnership, it looks like, looking at this, that the partnership could take a loss even though it wasn't a cash loss as a credit. And then that gets passed through to the owners of the partnership because the partnerships are pass-through entities. And bottom line, you're not going to be able to do that anymore. And that's that's a problem for the people that own the partnerships, that's for sure. Those partnerships, we know, bottom line, have got wrecked anyway. What's intriguing about that, let me go look at this again. I want to see what the dividend was. I remember when there was so many people calling when these were highs. That's all people wanted was master partner. Yeah, and that's why, I see. So still, you know, this is claiming that they has a 5% yield right now, 5.15% yield. That's what people are looking for. The unfortunate part about it is that you got the yield, but guess what? You got just even in 2 months, we've gone down 33%. Never mind what these have actually done, and never mind where it's going to go. So be always careful with equities that are pushing off large yields, because we're still in a very small, meaning number-wise, interest rate environment. You have the 10-year right now at 2.834. 30-year out here is at 3%. You take a look at the 2-year. The 2-year is 2.2. It makes a difference. There's no two ways about that. They're paying more. You know, you're paying 5, 6, 7% on a dividend for an equity. Worry about your principal. That's what you got to be worrying about. The principal, you want to see exactly how much money you're getting back versus just what those monthly payments are. We go take a look at the DAX in Germany. So the DAX in Germany had already broken down its lows. You come back on the other side of it. We still haven't got out of the February 9th area. And yeah, this is pretty cool. So the DAX in Germany still saying it's going to go to a lower price. We get the volumes on it. When this thing broke downtown on Monday, we did 135 million shares. Yesterday, you did 107 on the way up. More than likely today, you did 107 or lighter. We take a look at the FTSE inside the FTSE 100 in the UK. That couldn't move at all today. FTSE 7100, 39 points, and that is well into the February 9th bar. This thing, the FTSE looks to me like you've been actually building cars since February 9th. We come off that high of 77.91. You're at 71. You get sideways movement out here. You get volume at the lows. Yeah, I see what it's doing. It's building cars to get back inside the lower range. This is going to be a big heads up for us too, because if you get inside the lower range, that's going to bring the probability much higher that we are going to get inside the lower range, inside the NDX 100, inside the NASDAQ. What we didn't do out here today, which was a big positive, by the way, for the NDX 100, this could have, bottom line, gapped away downtown real easy, and that would have laid out a island top at the highs. You know, it's interesting when I say that, though, because we didn't. It's not that we didn't. We can still do it, because what the Qs, oh, this is so deviant, it's unbelievable. So what the Qs haven't done, they haven't got into this gap, the lower gap. So you could still get that tomorrow. This will be interesting, man, because you got triple witching, which is, you know, the cash S&P is basically expiring on the open, and then you get the normal futures, options, equities all basically expiring in the afternoon. What does happen with triple witching is that the volatility gets higher, because the volatility before the open is much bigger. And as Mr. Dave White, I was hearing him a little bit earlier, he was talking about, and I've seen this so many times, that many times wherever the market is going prior to that option expiration, it can go the other way, and it does many times in a heartbeat, because what the market makers or the operators are trying to do in general, wherever the bigger trades are, they just want to get it the opposite way, and they only have to keep it the opposite way for a small amount of time. The market's got to get open. It's got to be at the open. Where are we at the open? And then it's game on. So let that market open tomorrow first. Don't jump in right at the the open tomorrow, because the volatility is going to be heavy. It's always heavy. That's the bottom line. We take a look at some of the volume as we're coming into last 10 minutes of trading. You get 500 million on the NYSE, so that's going to throw in about 800. We take a look at the NASDAQ. 1.6. So there's going to be NASDAQ. There's going to be still throwing 400 or 500 in the NASDAQ. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now trading up 117. You get the NASDAQ down 14. S&Ps are off 1.5. And we go over and let's go take a look at see where we are inside the SPY with volume. Yeah, it's shot volume, 59 million. That's nothing. You know, they'll throw another 10 million into the close, but the bottom line is you get a sideways move, you get light volume. Inside the Qs, same setup. And here's where there is divergence. The divergence is going to be, of course, that you still you're coming down with light volume, and it looks like the indice is going to have a little heavier volume. Right now, you're at 23 million inside the Qs. That is also light volume, but as I said a little bit earlier, the danger inside the Qs as well as the, well, no, inside the Qs, because the composite, yeah, no, inside the composite also can leave an island top up there, because the way the composite broke out, 74.34. So bottom line in the morning, if You have those futures inside the NDX 100 down about a good 20 points. That would leave an island top up there, and that would be a dangerous spot for two different reasons. Island tops of 3, 4, 5, 6 trading days are dangerous. They like to pull back. In this aspect, what we have is that you have a breakout, that the NDX broke out nice, the NASDAQ broke out nice, but the other indices didn't. The NASDAQ got back inside the breakout area. That happened yesterday. That is a big heads up, because the reality is that if the NDX does get back inside that area, that would be saying that February 9th is coming at us. We look at the IBB. IBB has just got back into where the downdraft had started on February 1st. That hasn't handled price. Same deal, though. Guess what? You get light volume inside the IBB. You stay right there, folks. We're coming back with some numbers after the close. Right now, we have the Dow Industrials up 115 points. NASDAQ is down 15. S&Ps are off 1.5. Coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Spring's right around the corner, folks. Serve the one you love. Once you decide to be a couple there, to serve the one you love, to serve your love to your lover. And every kiss and every touch, you feel you're there to please the one you love without expecting anything back. Market-wise, let's take a look at it out here. We had the Dow Industrials up 115, NASDAQ down 15, S&P's flat, all with light volume, by the way, folks. Got some divergence out here. Gold contract down to 920, trading $1,316.40. Silver down 15 cents, $16.38. Now, both gold and silver, they pull back with light volume too, but as we know, coming into a Friday, this is going to be a danger point. Why? Well, we've been pulling back. It's been into this area 3 or 4 different times. It's rejected it that many times. We go over to King Dollar. What you're going to see with King Dollar is up 453 ticks, 89.680. Looks like King Dollar once again is going to go for this higher swing point, and on Fridays, dicey it's going to be. Copper was down 3 pennies, trading at $3.10 a pound. The light sweet crude also flat, $61.19. Notes and bonds, bottom line, notes and bonds are still building cause to get into higher price. So note and bond market looks to me flat out that that wants to go higher. If that goes higher, guess what, folks? What you're going to have is that the market is going to follow through to the lower side. We get option expiration tomorrow, so we have volatile markets anyway. That's going to throw in more volatility into this market in a big way. We take a look at bring up the dollar index first, because I suspect, to me, that the dollar index is the most important thing to look at right now for the metals market tomorrow. So we're up 443 ticks. You've done 20,000 contracts. What game out here is March 1st. March 1st, 90.885. That's game. We go back to the S&Ps, what you're going to see inside the SPY. SPY, basically sideways move out here. Light volume, big time light. Yesterday we did 105 million. Today you only did 71 million. Now that being said, you're inside the range, meaning the lower range. So we'll see what option expiration is going to bring. Now option expiration will bring monster volume. So the real question is, which way is that market going to move? Inside the three Qs, the QQQs, what you have there is that this also went sideways, light volume too, big time too. 25 million shares. Yesterday we did 40 million. We'll see where that shakes out. Now the composite, the NASDAQ composite did get inside the lower range yesterday. Went another 15 points in today, so the composite is saying it wants lower price. If we do look at the volumes inside the indices out here, inside the NYSE, we had 813 million. Inside the, oh, that's cool. Inside the NASDAQ, we had 1.9. So you can see the composite also, that was light volume. What is intriguing, and when I was just talking about the Dow, bottom line is that the Dow realistically is a sideways move. It's up 115 points, but you can see yesterday, the movement yesterday inside the Dow, the high of yesterday was 25,130. The low was 24,668 inside day. And an inside day basically doesn't tell you a lot about what the market actually wants to do. High volume stocks out here for today. You had the GE up 9 cents. We had Microsoft up 33. One of the big movers out here, Monsanto. We had quite a bit of movement intraday out here today with announcements. Monsanto ended up closing down $5.95. You take a look at this on a 6-month chart, and it's just a disaster. This thing it happened at approximately 11:30 this morning, and what that's all about is that the Justice Department, bottom line, is going to more than likely block the takeover from Bayer to take over Monsanto. So, of course, Bayer is a German company, and, bottom line, it doesn't look like they want that to fly. Now, that being said, I think it probably has to do with takeovers in general, because simultaneously, when the Justice Department came out and said that they want more info, that they don't think that that the takeover is a good deal, simultaneously Aetna turned around and went down intraday another $2. And what that's about is the CVS taking over Aetna. And it looks like most things coming out of the Federal Trade Commission. Let's see, I'm not sure. I don't think it's a Trade Commission. It's inside the Justice Department. Let me see where this. Oh, it's inside the Justice Department. It's the Justice Department Antitrust Division. Doesn't think that Bayer's proposal to sell businesses goes far enough. The government wants the German chemicals company to divest more assets to resolve the concerns. Bottom line is that I suspect it really has to do with the Justice Department basically is going to put the kibosh on many mergers, all of the above. That's what the market's looking at right now. We take a look at the well, actually, inside the commodities market out here, what you had wheat was down 2% today. You had natural gas off 1.7%. Now, numbers came out in natural gas. out here today. This thing went south, and it had volume behind the move. And, of course, you're coming into spring, so guess what? What's as wide open again is the bottom of this range. The bottom of the range inside the natural gas market is trading at 250. We went from a price point today of 275 to 266. Volume is not bad. Volume was 140,000 contracts. So it's not that that was killing it on volume as that traded to lower price. We take a look at the gold was down 0.6%. You had live cattle off 0.8. Copper was down 1%. Let's go to the copper market and take a look at copper. Copper right now, 78,000 contracts. So this has been a consolidation for 6 months. Looks like it wants to stay in that consolidation. In fact, it looks like it wants to go to the top of the consolidation, even though it's down today. Why? Because yesterday we had a nice spike higher. You went to 319. You had 113,000 contracts behind that move. Not bad. Dow Industrials finished up 115. NASDAQ down 15. S&P's right now up 1. Come right back.
Trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow finished up 115, NASDAQ down 15, S&P's up 2.5. This is going to get really intriguing, too. So, you know, what we have here, you know, we get the tariffs in place, right, on steel, on aluminum. You have if we go over to Broadcom, which is AVGO, bottom line, Broadcom closed up $7 today. Right now, you're trading, closed at 267.76. And this just come out with numbers, so let's look at the numbers. So their revenue was $5.33 billion. They saw a the earnings estimate was $5.10. They made $5.12. So bottom line is that they made their numbers. Net revenue $5.33 billion. So they definitely met their numbers, and it almost looks like intraday out here, the market was banking that they would meet their numbers. It's up $7. Now, that being said, Broadcom, okay, bottom line was wanted to take over Qualcomm. Well, bottom line, that got the kibosh because what you do have is that And this is where Qualcomm went down from a price point of 68. You're at 59 right now. So what that kibosh was on is that the administration didn't want a foreign company taking over an American company. We just talked about the aspect of Monsanto. That's Germany, Bayer taking over Monsanto, which did affect also Aetna and CVS. Well, Anthony Scaramucci, I'm sure he's getting a little rattled right now because if you go back, he ran, and he still does run until we'll see whether the Chinese are going to basically buy this company. He ran a fund of funds. Okay, so what a fund of funds is, folks, is this. So you get all these investment funds out here, hedge funds. Bottom line, the amazing part about, to me, what a fund of fund is that people actually invest in it. But bottom line, it's a monster business, okay? So what happens with a fund of fund is that the clients pay the fund of fund fee, plus they pay the fee for the hedge funds. What the sell is on a fund to fund is that the sell would be that you can't get into these other hedge funds. I can get into them because I accumulate a huge amount of money, so they'll talk to me. So that's how they sell these funds. Bottom line, though, he came out today, so Anthony Scaramucci sees no reason why the U.S. national security review should obstruct his ability to sell Skybridge Capital to a group in China, HNA Group. When I step back and look at Skybridge as a diversified fund of funds that's done an amazing job for its clients, I don't see a national security reason to delay or not approve the sale, Scaramucci said Thursday in an interview. Scaramucci had reached an agreement to sell his ownership in the investment firm to the Chinese conglomerate in January of 2017. As he was cutting potential business affiliations in order to join the Trump administration. He became the White House communications director and was fired 10 days on the job. The Committee on Foreign Investment in the U.S., the panel that examines cross-border takeovers for national security, accepted the sale for review. A person familiar with the matter told Bloomberg last month that started a maximum 75-day clock for a U.S. official to decide whether to approve or oppose the deal. My take, folks, bottom line, you can see I doubt it's going to happen. You know, whether, you know, he's a friend of the administration or not, because what has happened here, it's kind of not only out here, but out here in spades, you know, is that foreign takeovers are not going to happen. I mean, if the Aetna threat is going to be that CVS can't take over Aetna when two U.S. companies, and those stocks are going down because of concerns inside the antitrust division of the Justice Department, I just don't see it happening, you know, bottom line. So we'll see where that does shake out. After the close out here, I believe we got a couple numbers after the close. Well, yeah, we got AVGO. That's trading flat. Let's take a look at Alta Salon. So Alta closed up $4.15, $206. That's trading down the same amount of money that it just went up. Actually, it's trading down more. It's trading at $1.99, so it's down $7. And this chart is a mess, folks. If we take a look at this chart, what you're going to see, it's down off $307. Right now, you're trading $1.99. There's a high volume spike at $1.87. So you're going after $1.87. Let's see what they have to say. Okay, so the estimate was $2.76, $2.79. They made $3.40. So they made a big number. Same-store comp sales. Look at this. These are great numbers, but something's wrong here. Okay, so same-store comp sales, they were expecting flat. It's up 8.8%. Where did they go wrong here? Let's see. Revenue is in line. They're saying they missed by 3 cents. They're taking them south for missing by 3 cents. Okay. Let's see what they have. So Ulta Beauty, for the first quarter, the estimate, I see what's going on. Their first quarter estimate was $2.59. It's going forward. Now they're looking at $2.43 to $2.48. They had seen compatible, they see going forward, same-store sales going up 6 to 7%. They see first quarter net sales. The estimate had been $1.52 billion. Now they see that that would be the high end of the range. What they had, the high end of the range they had before is $1.55 billion. The capital expenditures is going to be $375 million. You know, the bottom line is that what they say is all rosy versus what the market is doing with it. I suspect what you have out here, this is Ultra Salon is getting Amazonized, Amazons in a big way. Because you know what? Guess what? You can get these products on Amazon. The real question is, I'm not sure whether they're more expensive, less expensive, but my take is that more than likely they're going to be less expensive, as most things are, and you're letting your fingers do the walking. You know, so that baby there, no doubt, has a problem. Looks like it's going to be a larger problem in the future also. If we go back to, let's go back to Broadcom and see what they have to say. So number-wise, okay, so Broadcom, look at these, no wonder why they want to buy everyone. Look at these net margins. This is amazing. So their gross margin right now is running 65 to 67%. That's pretty intense, man. You're selling a chip, or you're selling a royalty of the chip. They're probably doing both. And you're making 67 cents on every dollar. Pretty intense. Their adjusted net revenue is $5.33 billion. The estimate on the second quarter coming up, they had an estimate out here of $5 billion. Now they see $5.5 billion. Bigger number. CapEx, they're going to spend $190 million. And they're going to pay $1.75 and a cash dividend. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018 placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timer's Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go. We got a call from Vancouver. Our man Mike. He wants to look at a couple equities. The first one is Canopy Growth, and that's TWMJF. Okay, so this is how it trades inside the symbol that's inside. Well, they both trade inside the U.S. This just happens to trade in the over-the-counter market. So the low on this here is $4. The high is $35. I'm going to just bring it up as weed because I have it both ways. But so if we're looking at it in Canada, you're at $31.21. Now this company is the largest marijuana, basically distributor, medical marijuana distributor in the world right now. It has 546 employees. When you take a look at the numbers here, it's pretty impressive. Number-wise goes like this, is that in 2014, it did $1 million. 2016, 12.7. 2017, 39. This year, they plan on doing $79 million. They just finished a quarter. They did $21 million in the quarter. Now, this is where the big pop comes. The pop comes next year. They're going to go from $79 million. They're thinking that they're going to go up to $309 million. And what that's going to be all about is that recreational marijuana is legal as of July in Canada. So this baby here, I've been watching this a lot. I wouldn't be buying it right here. I have two different takes on it. Yes, does it want to go up to its high? Yeah. It's been a nice run. $44 is game. Not yet, though. What's game first is that you have a high volume low at $20.85. We're at $31.21, and I expect that's going to get hit. And that would be the buy on this baby if you're basically looking to go into that. This had a huge consolidation from 2016. It was trading $9 to $17. Then it broke out in November of 2017, made the run, and when it made that run, that was when, bottom line is that the legislation went through, that, it's going to be legal up in Canada. They have a huge amount. What's intriguing about this company is actually they're looking forward in a huge way, more than just the actual meaning marijuana, because what they're doing is that they're getting into the medical business. They're trying to buy someone right now. Let me see who this is. Yeah, here it is right here. They're trying to get, Canopy Growth, world's largest canopy producer by market value, our bid is for the closely held Spanish firm Alcalibra. Now let's see what Alcalibra does. They're not in the pot business, I know that, but they're in the okay, let's see. Alcalibra is already owned by a Spanish billionaire with stakes in Sanofi, which is, Sanofi holds 40% stake. Oh, I see what it does. Oh, that's intense. I don't know if, okay, so this was founded in 1973. It supplies narcotic raw materials based on the cultivation of the opium poppy, holy cow, and the transformation into poppy straw, as well as the extraction of alkaloids, according to the owner's website. Canopy has more than 500,000 feet of indoor and greenhouse capacity. I don't know, that's interesting. Yeah, I'm not sure. I'd like to know what they do with that narcotic raw material. One of the reasons that I like this company so much, actually, was that they will not go into any country, including the U.S., that it is illegal. So if you're dealing with a public company, folks, to me, you don't want to take that type of risk. because you know, bottom line, will it be legal someday? Yeah, I expect it's going to be. But guess what? You're dealing with money. You're dealing with business. You don't want that type of risk. And this company has stayed out of that type of risk. We'll see what happens. The second one, so I'd let it pull back. That's the bottom line. The second one, let me see, ACBFF. Okay, so this is the other large one. This is these are the two largest medical marijuana companies there are. So this is Aurora. The low. Oh, listen, look at this if you want to see this. Oh my God, this is hard to comprehend. The low is 1/10 of 1%. It's 1/10 of 1 penny. Yeah, that's 4 decimal points. Unreal. It's crazy. And the high is $12.30. So this here, let's see, let's take a look at this. These accelerations are pretty quick. 2016, they did 1.4 million. 2017, 18 million. 2018, they're claiming they're going to do 62 million. But they're not even close to that yet. You know, this last quarter, they only did 11 million. Now, they're claiming that they can go from 62 million up to 283 million next year. I suspect it's the same thing. It's going to be it's all about the legalization in Canada. Same type of setup on this. So on this one here also had the expansion from $2.40 in November of 2017, gets up to $12. You have a high volume low at $5.73. Yeah, I think you know, listen, I think these things are setting up, but I'd wait for that pullback in a big way. Now, if I go back to Canopy for a second, what's also going on at Canopy is this, is that the future of the marijuana, how you take it, how you do it and all that, what's getting big out here, folks, is infused drinks. That's the number. The places that that marijuana is legal are infused drinks, and what the companies have been able to do is get that right down to understanding how much THC they're putting in each one of those. And if we look at, and this is what's intriguing about Canopy, if you go look at this, what you're going to see is that Canopy is the only company thus far that a large liquor company has put any money into. You know, my take is that, you know, it's going to be the liquor companies that take these things over because they have so much money. Constellation Brands bought 20% of Canopy. They bought 18.8 million shares. And if we go over to Constellation, yeah, let's see. I'm going to pull up Constellation Brands so you can just see what kind of a monster these people are, meaning, you know, as the amount of money that they take in. So Constellation Brands, they basically own liquor companies, North America, Europe, Australia, New Zealand. They're headquartered in New York. And so here's the numbers on them. They did, they're big, but they did $4.9 billion in 2014. This year they plan on doing $7.6 billion. But you can see, bottom line is that you're talking about another liquor company, bottom line, getting in the marijuana business. Now, they're the only ones thus far that have put any money into that business. Stay right there, folks. Coming right back. We had the Dow Industrials finish up 115, NASDAQ down 15, S&P's up 3.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And as we were talking about the legal weed market, too, one of the Tigers was saying that there may be a delay in going legal, possibly until August, even though Trudeau wanted it to go through. Now, as I just brought this up, this is pretty wild. So if you do want some information about the weed market, let's check this out. This is... so let's see. I just brought this up. The market to invest and finance cannabis businesses is growing in the cannabis world. Progress and business exposition will be in New York. We'll have 2 financial strategists delivering top presentations. So it's the 5th annual Weed Expo. It's going to take place May 30th to June 2nd at the Jacob Javits Center in New York. We're going to be focusing on the legalization cannabis industry, including medical marijuana, adult recreational use, industrial hemp. Bruce Linton, the founder of Canopy, will deliver a keynote address on Thursday. Canopy Growth was the first cannabis company in North America to be listed on a major stock exchange and included in a major stock index. His experience as the founder, CEO, and board member across a wide variety of enterprises has influenced the positive start of Canopy Growth. Let's see, prior to, let's see who else. Yeah, so bottom line is that you want to know something about it, guess what? Go to New York, go to the Javits Center, and that could be quite a deal. particularly it's going legal in Canada. That's the bottom line. That won't be the first nation, but I think that's the first nation that is as close to us as, of course, right next door. So market-wise out here tonight, what you're going to be looking at is this. You came down, you had light volume. What that sets up tomorrow, to me, at the open, it's going to set up that these futures want to be higher. The real question is, you get option expiration, are they going to stay higher? Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. Have a blast with it, folks. Look forward to speaking to you right back here, 8 o'clock tomorrow morning. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
No matter what kind of trader you are,